The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Well, big week this week with the banks posting their results, everyone except CBA. Stock of the day is Westpac. Its profit slightly missing expectations, net profit down 1%. Net interest margins down 3 basis points on the prior corresponding period, but flat on the previous quarter. Total loans increasing 3% on the previous corresponding period, with customer deposits up 7% to $697 billion. Operating expenses growing 6% on improvements in tech and more hires, while credit impairments fell. Chief Executive Andrew Miller saying we may have passed the low point in the cycle. In fact, he was quite effusive too about the re-election of the Labor government, so they ran a good campaign. He's looking forward to what is ahead. So what is ahead for Westpac? Mathan, with maybe a focus on those NIMs. So, I mean, the stock's up significantly, of course, with the rest of the banks, but what about its financials? Haven't improved?
Yeah. Look, this whole sector is not running on fundamentals. It's more about liquidity. And it tends to be a big sector where, for global funds, it's probably the preferred exposure to go in and out banks, because they're the biggest, most liquid stocks, and they can go regularly in and out. So we have these unique trading because of CBA being the biggest stock in the market. So you can look at CBA and BHP, you're getting over 20% of the index with two stocks. It's only in the developed markets, Australia and US are the two unique cases where you can get a handful of stocks and control a massive chunk of the market. So it becomes a nice way to manipulate the market when you don't have to. So a day like today, the market technically is up, but it's actually down because the top two sectors are down. That's pretty much it. So you'll find that they trade kind of contrary because it's a nice way for them to hold the market up. But Westpac, look, I'm not surprised. The results weren't great. Market loves CBA. The rest are pretty much the same. In theory, all of them are fighting for the same pie, which is shrinking. You've got RBA that's cut rates with very dubious data, and they've already flagged about 3 weeks ago that they're going to cut in May, despite no real data to back it up. And they've already flagged it, so it's in the data and it's coming, and the market knows it. And yet, the banking stocks, I mean, we've seen clearance rate relatively low, so it's very hard to do. Westpac is sitting at pre-pandemic highs. You're talking about 10-year highs. I mean, the economy is not that great in a global macro. You look at listening to Jim Chalmers after the election. Still, global challenges are the biggest thing, and they're really, they're price takers in this. There's not a lot we can do. I mean, politicians can say one thing or another, but at the end of the day, we're small fry here. So we're price takers. So there's not a lot we can do. We are in a pretty good shape, but we are already in a substantial property bubble. That's a global phenomenon. It's just not Australia, but we obviously take everything to the next level. So the banks benefited from that. You've had a huge run. Valuations are not cheap. But look, at the end of the day, most of the retail investors probably bought it really cheap. They're not going to sell because of tax. So it really doesn't matter. You sit it through. The government guarantees basically deposit holders. So you kind of have this risk management done by the government. So the banks can pretty much run free. So they're okay. It's a hold. It'll probably come back with the economic cycle. That's for all the banks, probably CBA more than the others because of the multiple. But I don't see real reason why you would be putting money into banks, fresh money in. So you're going to be holding it because of tax reason, and I think it's fine. Even in a blow up, you can hold through it. They're not going to crash. But the reality is, it's very hard to see upside from here.
Well, you're sounding very resigned to that. A hold for you, Kai. What do you think?
I don't think I've got any new thoughts to add to that. I mean, it's a bit of a lackluster performance in terms of the reporting. Net profits down about 1%.
But let's stack it up against the others then. I mean, obviously we're going to hear from NAB and ANZ later this week.
Yes.
And in fact, we're going to talk about CBA a bit later in the show. But of the big four, how do you rate it?
Yeah, I mean, CBA's obviously number one in terms of both market share. We'll cover later.
Yeah.
In terms of growth prospects, I still like Macquarie the best. I think that, sometimes the stocks trade, during that fall, Macquarie fell to about 181. So like you have opportunities where you're picking up value, and they have a good growth profile. Of course, they do have a bit of an outsized exposure in terms of their trading division. So there's a bit of variance in terms of the P&L, but that's also an opportunity sometimes. I think Macquarie is probably the most exciting one out of the banks. Westpac, really, it's just one of the staple commercial banks. It's good. I mean, look, what did flag it in this reporting was basically their CET1 ratio. It fell about 31 bips. It's still well above, what APRA demands that the banks hold for their CET1 ratio, above 10.5%. So there's nothing really worrying about it. But yeah, I guess to summarise, it's just a bit lacklustre in terms of their performance.
So holding it though, or not?
If you have it, mainly for capital gain. I mean, a lot of people would have bought it very early on, accumulated a fair, decent amount of capital gain. Actually, one thing I did miss was they are doing about a $3 billion restructure in terms of their digital initiative. So basically, they're trying to consolidate everything, and I think a lot of the banks are doing that because they are realising that they're moving away from traditional banking, where you go into the branches and doing your business. Everything is a lot more digital now, and I think analysts have been a little bit worried in terms of updates from that. So there hasn't really been too many updates on how the progress is going, and in terms of the potential cuts in their expenses that it's going to deliver. So that's one to watch out for as well, because they spent quite a bit on it. So.
All right.
There's branches closing everywhere for all the banks.
Yes.
I mean, if you work in the city,
Yeah.
you realise it's hard to get to a branch now, because there used to be 2, 3 in the CBD. Now it's all down to 1.
Why do you need one?
Yeah.
Why do you need to go to a branch?
I actually still like going to the bank.
What, looking the manager in the eye?
Yeah. when you're moving money, I still like to give the check and go, that's just it.
give me cheaper loan rates.
Exactly.
Well, it's a bit difficult to find an ATM at this point, but then who uses cash, I guess? All right, that is the view on Westpac, our stock of the day, double hold.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.